Good morning, investors. You are now on KleverStock with me, Ainun Jarya, serving you the latest morning bell updates. Kicking it off with the opening bell updates on our local market. The FPM KLCI started Tuesday on a cautious note as investors digested the strong rally seen since the beginning of August. At 9 a.m., the benchmark index edged up just 0.45 points to 1,602.9. holding firmly above the key 1,600 psychological level after 5 consecutive days of gains. Rakuten Trade highlighted the positive trend, saying, having reversed its earlier decline in May 2025, the benchmark index is trending upward with consistent higher highs and higher lows, underscoring a bullish stance. We believe that holding above the 1,600 level could provide the momentum needed to reach 1,650 in the near future. However, the broker also cautioned that some profit-taking could set in following the recent rally. Separately, Malacca Securities said the local bourse is likely to trade with a positive tone despite Wall Street's overnight losses. The firm added that the expectations of a U.S. interest rate cut may buoy technology stocks, pointing to buying support in Unisum, Inari Amerton, and Frontcan, which it views as proxies for Apple, TSMC, and China's potential recovery. In active early trading, Valesto slipped half a cent to 19.5 cents. Next G eased half a cent to 48.5 cents, and Mestron dipped half a cent to 24 cents. Magma rebounded 2.5 cents after an extended sell-off linked to news of its chairman's involvement in the MBI investigation. Avilin added half a cent to 7.5 cents after reports confirmed that the son of Indonesian coal billionaire Loh Tak Kwang of PT Bayan Resources (TBK) had acquired a 9% stake in the company. We shall now look at the performance of our local currency. The ringgit opened slightly weaker against the US dollar on Tuesday, pressured by profit-taking as the US dollar index rose 0.73% to 98.430. At 8 a.m., the local currency stood at 4.2080 against 4.2175, compared with Monday's close of 4.2045 against 4.2105. Bank Muamalat Malaysia's chief economist Dr. Muhammad Afzal Nizam Abdul Rashid said traders remain cautious over how the U.S. Federal Reserve will respond to Friday's personal consumption expenditures price index, which is expected to hold at 2.6% in July. He explained the USD MYR could see similar moves as traders may look to lock in profits. The ringgit is likely to trade between 4.20 and 4.23 against the dollar today as markets stay wary ahead of the PCE report on Friday. At the opening, the ringgit traded higher against a basket of major currencies. It firmed against the euro to 4.8859 against 4.8969 from Monday's close of 4.9163 against 4.9233. It also rose against the Japanese yen to 2.8467 or 2.8533 and strengthened versus the British pound to 5.6593 or 5.6721. The local note was mixed against ASEAN currencies. It was little changed against the Singapore dollar at 3.2714 or 3.2790 and almost flat against the Philippine peso at 7.41 or 7.44. However, it appreciated against the Thai baht to 12.9437 or 12.9805, but slipped against the Indonesian rupiah to 258.7 or 259.5. Now moving on to economic updates. Malaysia's furniture industry is bracing for a heavy blow as the United States launches its latest tariff probe, a move that could threaten billions in exports and upend the sector's reliance on American buyers. The Federation of Malaysian Manufacturers warns that additional tariffs on furniture could slash orders, tighten margins, and push U.S. buyers to demand steep price cuts. FMM President Tan Sri Soh Tian Lai said furniture exports stood at 7.03 billion ringgit last year, representing 3.5% of Malaysia's total exports to the US. Any increased tariff barrier would therefore have a direct and significant impact on an industry that is already operating under tight margins and competing against lower-cost producers in the region. President Donald Trump announced on Friday that his administration will conduct a major investigation to furniture imports, with findings expected in the next 50 days. Malaysian exporters are especially vulnerable as the US currently takes in over 60% of Malaysia's furniture exports. So noted that even a moderate tariff could prompt buyers to shift orders elsewhere. FMM's ongoing survey suggests tariffs as high as 19% could hit exporters hard, leading to order cuts and leaving smaller players, especially SMEs, exposed as they lack the financial cushion to absorb higher costs or tap into new markets. To cushion the blow, Saw urged the government to act swiftly, calling for the expansion of free trade and preferential agreements with regions such as Africa, Latin America, and the Middle East. He stressed the need for technical guidance on rules of origin compliance, stronger export support mechanism, and direct financial assistance for SMEs to join international exhibition and buyer programs. It also called for the reinstatement of the brand promotion grant, the removal of administrative fees under Matrade's market development grant, and the creation of a dedicated national export resilience fund to cover redesign, testing, certification, and marketing costs needed to break into alternative markets. Complementary fiscal incentives such as double deduction for companies realigning supply chains or relocating distribution hubs would also help exporters stay competitive. Saw concluded that these initiatives are vital to ensure that Malaysian furniture exporters remain competitive, protect jobs, and strengthen Malaysia's global furniture footprint despite increased tariff barriers. And now moving on to corporate news updates. One of Malaysia's largest plantation players, FGV Holdings Berhad, will bid farewell to Bursa Malaysia this Thursday. The delisting marks not the end of its journey, but the start of what it calls a new chapter under full ownership of the Federal Land Development Authority, or FLDA. In a statement, FGV said its removal from Bursa's officials list at 9 a.m. on August 28 is part of a wider transformation plan, allowing the group to operate with greater agility while cementing its position as Malaysia's leading agribusiness and food company. The plantation giant, which debuted in 2012 in what was then built as one of the world's largest palm oil IPOs, will now return fully to FLDA's control. This follows FLDA securing a 94.97% stake at the close of its unconditional takeover offer on August 15, leading to a trading suspension on August 22nd. Dissenting shareholders have until January 15, 2026 to exercise their rights to share remaining shares back to FLDA at RM1.30 each. Group CEO Fakruniam Othman stressed that the delisting is not an exit, but a continuation of FGV's growth story. He said the company remains committed to sustainability, operational excellence, and transparency, with integrity and governance embedded at the core of its operation. FGV also highlighted its close ties with settlers, noting that more than 70% of its fresh fruit bunches are supplied by FLDA settlers and smallholders. The partnership, Fakruniam said, is about more than just numbers. It is about on trust, shared responsibility, and legacy. As part of its Merdeka and 68 Hari Malaysia celebrations, FGV launched a short film titled Warkah Dari Ladang to honor plantation workers, calling them the unsung heroes of Malaysia's agribusiness sector. The film is being showcased on the group's social media platforms and official websites. FGV says its transformation journey will now fully aligned with FLDA, will continue to prioritize long-term interests of settlers, employees, and communities it serves. And finally, wrapping up, we have major corporate developments and deals across Malaysia. Haili Group Berhad's wholly owned unit, Haili Construction Sunan Berhad, has secured a 50.1 million ringgit subcontract from Mandi Corporation Berhad, a subsidiary of Gadang Holdings Berhad. Sin Synergy Group Berhad, formerly Jade Marvel Group Berhad, has lodged a police report against several former directors after uncovering alleged irregularities in its money lending operations during their tenure. Southern Cable Group Berhad, which has an order book of 1.2 billion ringgit that provides earnings visibility until 2026, is looking to broaden its product range and boost production capacity. Next, Avilion Berhad saw David Low Yingod, son of Indonesian coal billionaire Low Tak Kwang of PT Bayan Resources (TBK), buy a 9% stake in the cash-strapped company for an estimated 9.3 million ringgit at 7 cents per share. And finally, Kerjaya Prospect Group Berhad's net profit for the second quarter 2025 rose 46.8% year-on-year to a record of 54.4 million ringgit from 37.1 million ringgit in the second quarter financial year 2024, lifted by stronger contributions from its property development division and higher top line from its other businesses. Now that's a wrap for Morning Bell Updates with me, Ainun Jara on KleverStock. Thank you for choosing us, investors. Stay tuned for the next live coming soon.